in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Tax Moves with Glen Birnbaum. This edition of the Moving Iron Podcast is brought to you by Dawsontire and Will, your premier ag tire and wheel provider in North America, helping people grow. Tractorzoom delivering insights, and Dryshod Boots, the official work boot of the Moving Iron Podcast. Glen is with Sickich, and he is a CPA out of East Peoria, Illinois. And Glen has been on the Moving Iron Podcast for, how long, Glen? A couple years now?
Couple years, yeah.
Since the 199A grain glitch went crazy and shocked the world, Glen came in and settled the dust and got it all figured out for us. So, how you been, buddy?
Good, yeah. It's we got always timestamp these. It's November 25th, day before Thanksgiving. So, just wanted to give everybody an update on the latest on PPP. So,
yeah, exciting news. PPP, the gift that keeps on giving, right, Glen?
Oh yeah, yep.
All right. So, before we started talking here, you brought up PPP and how you want to talk about that, and there's a bit of a glitch, shocker, in there that people should be aware of. So, for the farmers listening to this, there is a taxable and a non-taxable way, technically, right? Not that the IRS has actually came out and ruled on any of this, but technically, by the way the wording of the law and the way it looks now it looks to Glen like, and correct me if I'm wrong here, Glen, but if you have a Schedule F and you borrowed money against the PPP for your Schedule F, depending on if you pay wages or not, there's a likelihood that PPP money could not be is non-taxable, right? Am I saying that right?
Yeah. So yeah, let's dive in because it gets
okay.
we got to go back. So originally, when the CARES Act, this is part of the CARES Act, passed late March, and part of the CARES Act had the PPP in there, and right in the law, it said, hey, this, they're anticipating, the loans getting forgiven. Well, when these loans are forgiven, it's not going to be considered taxable income. So that was right in the bill. And so, I think if you look back, any articles written at that time, hey, this money, it was a question, is it going to be tax-free or not? And, well, hey, you look to the bill, look to the law, then it becomes law, and you say, no, see right here, it says it's taxable, tax-free, because the cancellation of debt or the forgiveness of debt will be tax-free. So that was late March. And then it was about, I think it was late April, or it was in April sometime that the IRS came out with a notice, IRS Notice 2020-32, that said, okay, well, yes, the taxable, the cancellation of the debt or the forgiveness of the loan is tax-free, but based on this other little rule in the code, any expenses you use the money for, payroll, rent, those type of things, under the law, it was in the past, nothing to do with the CARES Act, we're going to treat those expenses as non-deductible because it's kind of like you receive tax-free money, and so it kind of comes in, it comes out, it's kind of a wash, I guess, is apparently the logic. So, but the effect of that would be that the loan would effectively be taxable, because if you can't deduct expenses equal to the loan amount, then, it's just another way to look at it, but same difference. This PPP loan will be taxable, okay? So that was in April. And so we have all summer to go through this, and then a lot of people were saying, okay, well, but if I don't know my loan's going to be forgiven, if you remember, the covered period goes from 8 weeks to 24 weeks. So all of a sudden, where most people thought these loans would be forgiven in 2020 because you only had an 8-week covered period, which ended, typically into June, there'd be plenty of time to get this all trued up. Well, as soon as we go to 24 weeks, now a lot of people, aren't applying right away because, the rules are changing on a weekly basis. And so you're thinking, well, wait a minute, what if I don't officially get the notification from the SBA, or even if I don't apply for forgiveness until 2021, then couldn't I say I can deduct those expenses in 2020? Because I haven't officially been forgiven on the loan. And then we'll deal with whether it's taxable or not in 2021 if Congress might, act and fix this glitch. So that was, again, no one had to really file any returns, basically, but that was what a lot of people were thinking is, well, maybe we can get another year kind of grace period on this, right? So just last week, the IRS comes out with a revenue ruling now, which is higher than a notice. A revenue ruling basically saying the same thing as the notice, but also saying that we're not going to let you do this straddle period thing. So if you incurred the expenses in 2020 and you reasonably expect the loan to be forgiven, we're going to treat those expenses as non-deductible in 2020. So they pretty much put a kibosh on this idea. Okay, so basically for most taxpayers right now, you kind of have to say, hey, this PPP money is taxable. Okay, but we've got to now talk about what you said is the farmers or the self-employed people, the Schedule C, the Schedule F. Okay, so having said all that, though, before I get into that, this is just clear as mud, Casey?
Yeah, I'm tracking like a guy that's been doing taxes for 30 years right now.
Yeah, we're going to hire you on. And
yep. I don't need to go to college. I'm good, baby. Let's do it.
So where's this wrinkle? Well, again, what we were talking about is these expenses being non-deductible. Well, what if you receive the PPP loan not based on expenses, not based on having payroll, not based on paying wages, in other words? What if you receive the PPP loan based on your Schedule F income? Which, you might remember, it was basically you could get a loan of about $20,000 based on your 2019 Schedule F income. So if your 2019 Schedule F income was around $100,000, you get a loan of $20,000, and it was a sliding scale, below that. And if your Schedule F income was $200,000, you still got a $20,000 loan. There was a cap on it. So the theory would be, well, if I got my PPP money based on my Schedule F income, that really isn't based on me paying wages or anything. So could I say that the PPP money is tax-free? That $20,000 is tax-free. And right now, with no guidance, it's probably a pretty reasonable assumption to say that. So, but the result of that is, well, now we'd have some taxpayers that the PPP money would be tax-free, i.e. Schedule F farmers, Schedule C people, self-employed people who had no employees. Their loans would be tax-free, but then, the vast majority of people, and certainly the vast majority in dollars, would be taxable because, you got the PPP loan based on spending money during that covered period. So it would seem to be a bit of a problem. And I guess the question is, will the IRS come out in a few weeks or a month and try to close this down? So the bottom line is it's a lot of uncertainty on what our taxable income is for 2020. And so, when we're doing tax planning, it's quite a variable.
So I'll make sure I understand this right. So if I'm a farmer and I've got a couple hired guys or whatever, and I got this PPP loan, and depending on how I worded it, I've got to pay taxes on this money. Is that what you're saying?
Yeah, I think what you're saying, depending on how you applied for it initially, is that what you're saying? Did I do it based on wages or did I do it based on my Schedule F? Now, there is a thought I saw, another practitioner who I have a lot of respect for, I think he's getting questions about, well, what if I, got the PPP loan entirely based on wages? Because at some point, there were times where we weren't sure how this works for a Schedule F person. If you might remember, Schedule F wasn't even really mentioned in some of the guidance. They talked about Schedule C, and does that mean, so there was questions. So maybe there's a self-employed farmer who just got the PPP loan based on paying a few wages to people, but they do have a Schedule F. Could you kind of change it up and say, well, no, I'm going to treat at least the first, $20,000 of this loan as tax-free?
Yeah.
So it's,
So if I would, wow, because there was no guidance out at the time that had anything to do like that. Back in March, if I would have been a farmer and said, okay, cool, I'm gonna get this, and here's my Schedule F and go, or because I really doubt there were many guys that said, I'm doing this to cover wages. Most of them were just like, I'm just gonna file it off my Schedule F. When you say that would be, there's some farms that have quite a few.
Probably, yeah. but I mean, part of it's the timing too. Initially it was really supposed to be people that had wages were supposed to apply first, and then they were going to do the self-employed people later.
Right.
Well, what about a self-employed person that had employees? Kind of the mixing bowl. But yeah, it's just another variable that we don't. So when we're talking to clients, it's just difficult to know what their income is. So
That's crazy.
That's 2020 for you.
Yeah, no kidding, right? So if I got $1 million out there, $1 million PPP loan that came through, or $500,000 or $50,000 or whatever the number is,
yep,
it's still unclear, depending on how I filed for it, whether it's taxable income or not.
Right, but again, to go back, I mean, the most, I guess you could say this pretty comfortably, the most that could be tax free would be $20,000, because that's that was the cap on your Schedule F income. So, if you have that $500,000 loan, it's going to be $20,000 is all, so the vast majority will be taxable. We have to plan on that for right now. Now, as far as tax estimates and things for your non-farmers, people that are paying quarterly estimates, we have a January 15th estimate coming up. So we have a little bit of time to determine, what our income is. But most people will try to just pay based what we call safe basis, meaning, again, I'm talking non-farmers for right now. You would just pay based on last year's taxes, which is typically either, 90% of last year, 110% of last year. But the bottom line is to be safe, you might just say, I'm just going to pay based on last year to avoid penalties. And then I'll have my, true up moment on April 15th, right? And hopefully by April 15th, we'll have, ultimate clarity on this. So that's for, most taxpayers. For farmers, there are some farmers and maybe probably quite a few farmers, probably over half the farmers do not make quarterly estimates, and they make just one estimate. You can do a couple things. You can make just one estimate on January 15th, so you don't have to pay quarterly. So that's the same timing issue there. But the other one is if you pay all your tax by March 1st, you would not have to pay estimates too. So maybe farmers have until March 1st in order to really know what's going to happen here. So there's more time, but it still prevents you, right, from, you still have the issue of what am I going to do? Am I going to buy some equipment, this fall before the end of the year? Yes, this is moving iron. So, you don't know, right? That's the challenge. So we've talked about this a number of times, and I guess I'll mention it, and we'll probably get into this in another podcast before the end of the year in more specifics. But, a cash basis farmer has a lot of flexibility, and they can use hindsight to get their income where they want it if they have the right type of grain contracts. And we've talked about this before, right?
Yep.
If you sell your grain in the fall, so title is passed in the fall, but you have this installment contract where you're basically, you have no access to the money until January 1st. You've pushed off that income until January 1st. You basically then, you don't show it as income until, you deposit it. But there's this rule that says, well, if you want to, kind of change your mind. And so you can say, hey, money came in January of 2021. It was deposited in 21, but I'm going to what's called elect out of the installment method. And I'm going to elect to push some of that income back into 2020. And if you remember, that has to be on a contract by contract basis. So you can't just say, I'm just going to take, 15,000. It has to be based on bushels. So you have to have, a number of contracts. So if you have a lot of multiple contracts with sales where you're taking your money in January, we can go back in and push income back into 2020 to get income where we want. So if we're not sure about the PPP loan, whether it's going to be taxable, right, we can use hindsight and get it where we want to be. We used to do this when we didn't know if there was going to be bonus depreciation or some of these things. So farmers do have the ability, if you've got those installment sale contracts out there, to be able to get your income kind of where you want it to be after the fact, whereas most taxpayers, right, you can't do that. And so you're kind of stuck. Do I have, $300,000 of taxable income, or do I have $100,000 of taxable income? If I have a $200,000 PPP loan, you just, I don't know, So I guess take a little solace if you're, a farmer, that you do have some flexibility to, so basically what we've talked about in the past is you end up having when you plan, you end up having too low of income than you really want for 2020. But knowing that you've got plenty of grain carried over on these installment sale contracts, that you can go back in and sprinkle it, back. So that's certainly, that strategy will definitely be employed, this year because of the PPP. Just adds another variable.
Well, good thing this is very clear and
Yes.
easy to do. So
Extremely clear.
good reason to have a tax professional help you muddle your way through this, Glenn. Is there?
Yeah.
So what's the easiest way for them to get a hold of you if they have questions about all this clarity on the PPP program? Still be probably just best just to call our office number. We have limited people in the office, but that's the best way to reach me. That phone number is 309-694-4251. You can always look me up on Twitter at Glen Birnbaum is the handle. You can go to our website, sickage.com and find my email there as well. The other thing I forgot to mention, Casey, is Sickage is going to have an ag kind of a little mini virtual conference for a couple hours on Friday, December 11th. So I'm sure we'll have a podcast before that again, but there'll be a seminar on Friday, December 11th, which I'll be speaking for a few minutes just about, maybe what could be some tax changes down the road, right? If we've got an administration change, what laws might change in the state tax or income tax. It'll be a pretty quick hitter, but you can go to the website and register and sign up for that virtual conference on Friday, December 11th. Right on. And that's on Sickage's website?
Yep.
And that's just
Sickage's website.
SICITCH.com?
So SIKICH.com.
All right. Good thing you spelled that for me, Glenn. All right.
Yeah, again, we'll definitely try to have a podcast one more time before that, December 11th. And,
cool.
So look to that. But so what we're hoping for is that Congress will fix this. Will this kind of fix on the PPP be attached to a stimulus bill, or will it be attached to, this government? The government, I think, is going to shut down sometime around December 11th, as I recall. So, could it get attached to that bill? That's what we're hoping for, so we have clarity, so that we can have some semblance of normal for tax season. Because otherwise, I really do think, people are probably going to think about really extending their tax return, just because, if there's still this question, and if there's still a bill being debated and about the PPP taxability, you just say, why would I file early and volunteer this tax?
Yeah.
So yeah.
Yep. No, definitely.
So we got plenty of time. We got over a month to figure this all out. So
plenty of time. Nothing like being up against the deadline, right, Glenn?
Yep.
Right on, buddy.
So you might get some last minute questions, or last minute inquiries about buying equipment. If depending on what happens here. So.
And we'll take them, Glenn. We'll take all of those. Every single one of them.
That'll be at your.
I'll be ready.
Your computer and phone. Yeah.
I'll be ready and waiting. What's your contact information one more time?
So the office phone number 309-694-4251, or you can look me up on Twitter at Glen Birnbaum is the handle. Our website is sickage.com, SIKICH.com.
Right on. Well, Glenn, appreciate you being on the podcast, man.
Well, thank you, Casey.
Right on.
Have a good Thanksgiving.
You too, man. I am Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest editions of the Moving Iron Podcast, as well as any blogs that get posted out there. Also, movingironllc.com is a great place to find all the information for the Moving Iron Summit coming up in January in Nashville, Tennessee. That's the 20th through the 22nd. That'll be at the Renaissance Hotel downtown. Also, the Global Ag Network is a great place to find other ag-related podcasts and all the podcasters out there as well. So with that, I am Casey Seymour with Glen Birnbaum. Let's go move some iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. find us here.